You're welcome back. If you just joined us, you're watching Business Incorporated on Channels Television. Now let's take you to the fixed income markets here as Samuel Musa, who is a fixed income dealer with Access Bank, joins us from Lagos. Hello, Samuel.
Hi, good afternoon.
Good afternoon. Thank you so much for your time. Now, it's been a busy week at the domestic fixed income markets. What was the week like in terms of yields at the treasuries and bond markets?
Okay, all through the week we've seen the CBN conduct a series of OMO auctions, but they've not been able to mop up as much liquidity as they would have expected. Yesterday, we saw them being able to mop up about 68.5 billion. And then today, again, we had another OMO auction where the CBN mopped up about 93 billion as well. And the trend we've seen so far is with the announcement of these auctions, we've seen an increase in yields across board. That's both in the treasury bills market and in the bonds market. Although we've seen some resistance in the treasury bills market because of this liquidity that has persisted in the system. So we've seen some buying interest, especially on the short and medium tenor bills. So between December 2016 maturities and March, April 2017.
Okay, so please tell us about the figures in terms of how the yields have been today.
Okay, so for today in the treasury bills market, particularly are still being on the short tenor, like I said, so between December and February bills, rates have dropped. On the December bills, we've seen the most part there. Rates have dropped by an average of 100 basis points, while for the January and February bills by about 50 to 60 basis points from the day's opening levels. While for the bonds market, with the announcement of the OMO auction initially, we saw some selling interest. Yields increased by about 5 to 10 basis points, but we saw some retracement as counterparties bought these securities back.
So what's your outlook for next week? Any auction expected?
Yes, for next week, we have the bond auction, and then we also have the treasury bills auction. For the bond auction, the DMO will be offering about 95 billion across the three maturities, the 2021, 2026, 2036 bonds. And then we still see demand quite significant for these bonds at the bond auction, as well as the treasury bills auction that we also have next week, Wednesday. Now, with the level of liquidity being a bit thin, given the continuous OMO auctions by the CBN, we would expect that rates next week would actually inch up.
Thank you so much, Samuel Musa, fixed income dealer with Access Bank, talking about the fixed income markets in Nigeria. Mozambique plans state spending of a third more than budgeted revenue in 2017 and to cover the shortfall with domestic and foreign loans. According to the finance minister, Adrano Milan, the country budgeted for a deficit of 11% of its gross domestic products this year, high by international standards, at a time when it had the financial support of the International Monetary Fund. But the fund and other donors suspended assistance early in the year after the emergence of more than $2 billion in loans that were not approved by Parliament or disclosed publicly. In addition, steep declines in commodity prices have sharply slowed growth in the country. The minister said that next year's spending would total 272 billion meticals, that's $3.74 billion. It pegged the state's revenue at $2.5 billion, which indicated the deficit would narrow next year. In Egypt, headline inflation surged to an 8-year high of 19.4% in November, in the first report on price rises since the central bank floated the currency and hiked fuel prices last month. According to the official CAPMAS statistics agency, annual urban consumer price inflation jumped from 13.6% in October to reach its highest level in November. That was since November 2008, when it exceeded 20%. CAPMAS said food and beverage inflation reached 21.5%, an eye-watering number for tens of millions of Egyptians who scrap by day to day. Egypt abandoned its peg of 8.8 Egyptian pounds to the US dollar on November 3, floating the currency in a dramatic move that has since seen it roughly halve in value. And Walmart's Mexico chief executive announces a $1.3 billion investment in a Latin American country. This comes despite the uncertainty that follows the election of U.S. President-elect Donald Trump.
Retailer Walmart de Mexico says it will invest $1.3 billion in logistics in Latin America's #2 economy, a show of confidence in Mexico at a time of uncertainty after the election of Donald Trump in the United States. A large part of the investment will be over the next 3 years, including back-end infrastructure, creating some 10,000 permanent new jobs directly. Walmart has already invested 80 billion pesos, an equivalent of $3.93 billion in the past 4 years, and President Enrique Pena Nieto hailed the company's latest commitment to the Latin American nation. The election of Donald Trump has thrown Mexico's business world into uncertainty as he has attacked U.S. companies investing south of the border and threatened to renegotiate or scrap a major trade agreement with Mexico. Walmart Stores' Mexican unit is the country's largest retailer with more than 2,200 stores.
And oil prices extended gains on Friday, driven by growing optimism that non-OPEC producers might agree to cut output following a cartel agreement to limit production. NYMEX crude for January delivery was up 17 cents at $51.01 a barrel after closing up $1.07 on Thursday. London Brent crude for February delivery was yet to trade after settling at $53.89 a barrel on Thursday, following 2 days of declines. Oil producers will meet in Vienna on Saturday to see if non-OPEC countries will cut production to reduce a global supply glut that has pressured prices for more than 2 years. OPEC has agreed to slash production by 1.2 million barrels per day in the first half of 2017, a deal that bolstered crude futures despite doubts over whether the amount was enough and whether the cuts will be effectively implemented. And with that, withdraw the curtain in today's edition of Business Incorporated. Thank you for being a part of the program. We hope to see you again next week. I am Bolaji Akinwale.